Hey YouTube, this is Zach with Achilles Financial, and today I want to talk about two stocks in particular that I think are being heavily sold off in association with their speculative nature as well as the overall market conditions, and I'm looking at them for a potential buy to ride back up. The reason for this is because I am heavily bullish on the online sports betting industry. And while I may not necessarily be as bullish on the overall stock market, I think that these are great setups for long-term holds. DraftKings in particular is a stock that I've talked about a number of times on my channel, and I would just want to highlight that as they continue to be sold off, I think that we're rapidly approaching an oversold position. Keep in mind, though, that despite the fact that we're pretty well off those all-time highs, with again the overall high being back last year, and we approached much higher, or at least near that point in time earlier this calendar year, I just want to highlight that despite the fact that we're 30 and 40% off of these all-time highs, this stock could continue to drop lower. I think that for DraftKings in particular, we don't really have that floor until $50 a share. We can see some of that going back all the way to January of this calendar year. Not necessarily looking at this from a technical perspective, but more so just highlighting some of the growth potential and some of the decline potential associated with the stock. From what we've seen historically, you can see most of this has been pretty heavy red, and we've been kind of on this long, slow decline here, despite the fact that when we look at the news, they've actually had a lot of positives, including a deal for exclusivity with UFC, with the NFL, as well as with the legalization of online gambling in states such as Arizona over the course of the past few weeks. What I want to highlight here, though, is from an overall valuation perspective, this is still a stock that is trading at a very high price to sales ratio. Again, you can see the broader industry here is trading at right at 12 times sales, whereas DraftKings is still trading at 37 times sales. This is why I think that they still have the capability to drop a little bit farther. Rather than just focus on this, though, I want to highlight that the growth, or this number, I anticipate is going to change because we're looking at the trailing 12 months number right here. What this is doing is, if you look at the fundamentals in TD Ameritrade and we look at income statement, we're looking at total revenue, and on a quarterly basis, you can see that we have, or the number that's being baked in the price to sales is the last 4 quarters. You can see one of those quarters was 88 million, one of those quarters was 70 million. Now, I am by no means expecting this Q1 number, which will be released in May, to necessarily beat or exceed what we see in Q4. The reason for that is that we just don't have that same level of football dominant presence that we had in the fall right now. But I still think that there's going to be a hefty increase year over year from what we saw last year. Despite the fact that the NBA isn't currently carrying the same kind of power and drive, I still think the overall adoption is continuing to grow, and for that reason, we're going to see additional states continue to legalize online gambling, and that's only going to benefit their total numbers. So if we see a quarter that is maybe an average of the Q3 and the Q4 numbers of somewhere between 150 to 200 million in total revenue, I think that we're going to see that drop down below 30, which makes it a much more attractive price to sales ratio. But again, the stock could continue to climb or decline until then. So for that reason, I still want to encourage caution. But from a long-term growth perspective, this is a company that does have the cash to be able to manage the ongoing spending campaign that they are utilizing, as well as they do have the capability to go out and continue to push their product and continue to grow at a very rapid pace. So for this reason, I personally am rating DraftKings as a buy purely based off of the news and the recent decline. I think we're at a much more attractive valuation, but it is going to continue to feel some of that pressure of the overall market. In alignment with that pressure from the overall market, I do want to talk about one additional stock in the form of DMYD. They are having their merger conversation later this month. And by conversation, I mean the vote later this month. This is the SPAC that is taking Genius Sports public. And I already said both on Twitter as well as in my Discord, I sold these at $20 a share. I actually purchased this stock at $12, $13 a share, somewhere around here when they were first announced. I sold them at $22 a share because I said at that point in time they are overvalued. Now they beat out, I bought back in around the $15, $16 mark. It wasn't quite this low, but I mentioned at this point in time back in early March that I'd be looking to do the same or to hold long term. When they announced their deal with the NFL, where they would be the exclusive data provider, beating out their big rival in Horizon, which is taking Sport Radar public, they were able to shoot up over here, nearly going to $23 a share. At that point in time, I sold at $19.80 or nearly $20 a share, and so I missed out on that upper level gain. But at this point in time, I said that I'm looking to get back in between $16 to $17 a share. You can see we're now in that range. I may be looking to pick some of these up tomorrow because I really like the company. They have strong fundamentals, they're profitable, and they've got cash in the bank. They just really need to complete that merger, so I may wait to see what the stock is doing a little bit prior to that merger, because I don't believe that they're immediately going to shoot back up to $20 a share, but I do like this on the long-term hold potential. So these are two stocks that I very much so like because they are heavily involved in the online betting industry. They are both growing sales at a very rapid pace. Genius Sports, which is DMYD, is actually profitable, and I just like the overall growth prospects as well as the product for DraftKings, so that's why I like them both. This is just my opinion, but I do want to highlight these because they are approaching very attractive price points, and for that reason, I'm going to continue to evaluate them. So if you have any questions, feel free to drop those in the comment below or check out the Discord. We talk about these stocks amongst others very often there, and we've got a group of about 150 in there, so a lot of good conversation. But if you find this content helpful, please leave a like and subscribe, and I will talk to you all later.